guys, what's up? My name is Shane from AwakeFX and I want to welcome you to this trading video. I really appreciate that you clicked on it to watch. Now, without further ado, I want to tell you about this video. In this video, I'm going to show you a checklist of how I trade the Eurodollar in the morning UK session using ICT concepts. So I've put together a checklist that can help you if you are already trading or are interested in trading the European session for the Eurodollar specifically, because I only trade two markets. The first market is the S&P 500 or the ES, and the second market is the Eurodollar. So I specialize in two markets. I look at the European Open for the Eurodollar, and I look at the US Open for the S&P 500, and I only trade them two. So without further ado, let's have a look at the checklist, and let's have a look at some charts. And if you like this video, subscribe, and then you'll find out about other videos that I've up and coming. And also, yeah, if you make some comments or questions in this video, I'd be delighted then to help you with them too. So let's go to the charts. Okay guys, so this is my YouTube channel, so just make sure to subscribe if you're interested in more videos like this. Now, I did see a question from a person on my first video, and that's what prompted this one really. This gentleman here asked, does this work for any other pairs like gold, the pound, or the euro? So to answer that question, yes, I trade the Eurodollar. I'm going to look at the Eurodollar chart literally from today. Okay guys, so this is a Eurodollar chart from today. You can see the date 26th of January in the bottom right corner here, 2023. So this is today's data from this morning of the Eurodollar, and it's a 5-minute chart. So each bar represents 5 minutes of time. Now, I have the chart in bar replay mode here, so I can literally move forward here one candle at a time on the chart by just clicking down below. So I'm going to show you a setup that appeared today in the market. I took it earlier on, and I'll show you the checklist that I use then in order to take these type of trades. So the step one, the first thing I do is I'm at my desk at 1:30 a.m. New York time. What time is that in the UK? It's 6:30 a.m. UK time, right? And the first thing I do is I mark, I draw my rectangle. It's a 2 a.m. to 5 a.m. New York time rectangle. So let me show you what I mean by that. So at the bottom here, you can see this time is all New York, okay? New York time. So I'm going to literally draw a box in the future each morning that is between 2 a.m. and 5 a.m. New York time. So I just expand that up. So this is my session, okay? I've created a little template here, and I call this the UK kill zone. So this is information I've learned from ICT, Inner Circle Trader, so there's nothing new here. So 7 a.m., 10 a.m., this is what I've drawn out here. So that is 7 a.m. to 10 a.m. GMT, which is the equivalent of 2 a.m. to 5 a.m. New York time. The next thing I do is I draw two vertical lines. The first one is here, 2:30 a.m., which is the same as 7:30 a.m. GMT. The second vertical line, I draw New York time at 4:30 a.m., which actually is 9:30 a.m. GMT. You probably wonder, well, why am I doing this? This is the session I'm looking at, the kill zone. I always find that between 7:30 a.m. and 9:30 a.m. GMT time is usually the best time to find the setup. Okay, and it's usually the high of the day or the low of the day. Okay, now once I've that done, next step is in the morning at 6:30 a.m. GMT time. This is what I'm doing, setting up my charts. So the next thing I'm going to do, I'm going to mark the buy side. So where is there a swing high to the left here of significance? Well, there's one here, we can see. Okay, and there's also one up here at the top. So I would mark the more extreme high, and this is what we call the buy side. Okay, so I've marked it up at the buy side. So a lot of buy stop orders are up there. Okay, so that can be an area a price might gravitate to. What I do next is I mark up my sell side. So I'm looking for a swing low point to the left of this box, significant swing low point. So there's one here, and we call that sell side. Okay, so there is a swing low here, swing low here. There's also a swing low over here. So maybe we'll mark the most extreme one. Let's say this one here on the chart. Okay, so step one, we've drawn our box. Step two, we've drawn our two vertical lines. Step three, we draw our buy side and our sell side. Okay, next, it's a waiting game. I'm waiting for either the buy side to be broken or the sell side to be broken. Okay, if price moves up into our trading session and takes out the buy side, I'm looking for a signal to go short. If price moves down and breaks the sell side during this time, I am looking for a long. Okay, so let's play this out. I'm going to move candle by candle now. This is in replay mode to show you what happened today, 26th of January 2023 on the euro dollar. So let's move forward. So as you can see, candles are forming here. Each one would have been 5 minutes. So you can see here, price looks like it wants to move higher. Okay, boom, we have a move higher. Okay, so when I see this break of this buy side, in the back of my mind, I'm thinking, okay, will there be a sell opportunity today? Will price come back down into the range here and produce a sell opportunity? So let's see. Okay, we've moved back down into the range. Okay, so it's selling off quite heavy here. Okay, so now that our session, which we've marked up 7 a.m. We're in that session now. The first thing I'm thinking, okay, well, what's happened here? We've had a break of the highs. Okay, I'm looking for a short, potential short here somewhere. Okay, now the concepts I'm going to speak to you about next are a little bit more advanced, but I will make videos about each of these. So what I want to see when I see a break of a high and a move back into the range, I'm looking for a short. So from here, let's say prices move down, I would like to see kind of price move up and potentially take a short, okay? And my target then would be the sell side, okay? Something like this, okay? Now, let's see what happens next. Okay, price goes right down. Okay, so once price starts moving up like this, I'm looking for an opportunity to go short. So there's two concepts that ICT teaches. One is what's called a fair value gap, and there's one here. If you see the low of this candle and the high of this candle here, there's a gap in price here. So we mark up what we call a fair value gap here. Okay, mark it in red. So this is one area you can consider going short. Okay, the other option is what's called an order block. Okay, and I will make videos about both of these things individually at some point after this, but this is a fair value gap, number one. The other thing is an order block. So I'm going to draw a line here, and this line will be an area that we would call an order block. Okay, so this up candle that breaks the buy side, and then we get a rejection back down. The kind of open of this candle here, that's also a level of interest. So within this whole zone here is where we're looking to go short. Okay. Now, ideally myself, I like to take these trades between this 7:30 and 9:30 a.m. GMT time. So let's see what happens here. Okay. So we can see prices moved in to this area here. And we've had rejection. So what you could do here is you could go short in this zone. Okay, so literally what you could do is you can take a sell, let me just put that in here, in this area, okay. I would personally always put my stop loss above the high, okay, of the high, and I'd like to get short in this area, in this zone here. Now, price hasn't come back up into this level, order block level, so let's see if we can get a move kind of back in here, and then my take profit would be right down here below, back down here where the sell side is. Okay, so we want, there's a 1.9, we want a 2-to-1 reward to risk ratio minimum, you know, to make this worth our while. So something like this could be a potential entry level. Okay, so if price moves up and hits this line here, we'll go short, we'll leave our stop loss above the high, and then we'll target the sell side down below. Price moves down, okay, boom, it moves up and it spikes into our level to go short. Okay, so now we're in a short trade, our stop is above the high. What happens next? Price moves down. Okay, so now we spike back up into that zone. Okay, we hit the order block, but our stop loss is protected because we keep it above the high. Okay, we move up a little bit higher again, but we don't take out the high. And then price moves back down. And then our target is hit. Okay, for a 2-to-1 reward to risk ratio. So that's a trade, sample trade you can take in the euro dollar in the morning using ICT concepts. Just to summarize, we had our buy side, break a buy side, price moves back into the range, we get a pullback into an ICT concept such as a fair value gap or order block, stop loss is above the high, and then we look to target the opposite sell side in this situation. So that's what happened on this day. So I would take a trade like this, get in, get out, you're done for the day, and that's it. You know, and these happen very, very often. All you need is 1 or 2 trades a week, you know, and then that's it. Like, so if you're risking 1%, you make 2% on the trade, and you have 2 of these trades a week, there's 4% a week. There's, you know, 16% a month, which is a fantastic result. Less is definitely more in trading, and I always recommend that you just look for one setup a day in your key times, draw your levels like this, and let me know how you get on, if it's something that is helpful for you. And I look forward to seeing you then in the next video. So thanks for watching. Please subscribe, and I'll let you know. I'll create some videos about these other concepts such as order blocks, fair value gaps, so you have more information. Thanks, and bye-bye for now.